Hi everyone. Welcome you all to another lecture coming under Cost and Management Accounting subject. And actually, we have started discussing about process costing, one of the important lessons in your syllabus, process costing. We have started discussing this last week. And then I told you there are two parts, mainly process costing one and two. So we have started process costing part one. And then I'm going to, through this recording, I'm going to continue that lesson, which from where we stopped last week. Right. So before that, just to quick recap what we have discussed coming under process costing, because it's very important to have that knowledge, understanding when you go along with the activities, because all these activities, part one, part two, are linked. So without the basics, you won't be able to understand the coming activities. So that is why it's very important you to go through the basic things we discussed in last week's session, and then you can continue. Right. So I explained you the process coming under process costing. There can be multiple processes, more than one after the other. These processes are continuing, and throughout these processes, we are manufacturing a homogeneous product, similar product, not like we produce one type now and then we are producing another type next. Not like that. We are going to continue homogeneous production, and it's a mass production, not one or two or three items, I would say, but a mass production is continued in when it comes to process costing. And the most important mantra you need to remember at the end of each process, let's say process one, the output of process one becomes the input of process two. So always output of the previous process becomes the input of the next process. Likewise, always output is getting transferred to the next process. And then I told you the cost is accumulated for each and every process. Let's say there are three processes: cutting, sewing, packing, as we discussed last week. So we take the cost of the cutting process. We take the cost of the sewing process. We take the cost of the packing process. Likewise, we accumulate, we calculate the cost of each and every process separately. And then what do? We can get the number of items or number of units passed through one particular process. For all three processes, we can calculate how many items pass through process one during a particular period. How many items pass through process two during a particular period. Likewise, we take the cost of the process. We can separately calculate the number of units passed through that process. Then we can calculate the unit cost. So I explained all these things graphically with an illustration like this. I will show you quickly. I explained you this process last week, right? So that you need to remember when you go along with these activities. And then I explained you the costing methods, how this process costing comes, what is the difference between specific order costing and continuous operation costing and all. I explained all these things, and I told you process costing comes under continuous operation costing as well, right? Okay. And then when it comes to process costing, there were features, we discussed them as well. And then this quick illustration, process A, process B, and then we are adding materials, labor, manufacturing overheads, all these items to process A, process B, and then always process A output is transferred to process B. Likewise, it goes. And then the accounting part, I explained this as well. I'm not going to explain again. And then I told you when it comes to process costing, we always use different scenarios. Scenario one, scenario two. With scenario one, we assume all the units are fully completed. There are no any incompleted units. Work in progresses are not there. But when it comes to scenario 2, there are work in progress items, right? WIPs. And then I told you there are different losses in a production process. When it comes to process costing, there are losses. There are two types of losses: normal losses and abnormal losses. So that also I explained with some examples. Normal losses, I told you, that is expected. Normal losses are expected. Anyway, it can be there based on industry averages, based on the company's best practices. Normal loss is expected. But abnormal losses, that means if the actual loss is greater than our expected normal loss, that means something abnormal has happened, unexpected has happened. So abnormal loss is always unexpected. And I told you, normal loss, that cost of the normal loss, we always treat as a part of the good output. If we are manufacturing t-shirts, we take that normal loss cost as part of the t-shirts because it's very normal. Anyway, we have to incur those losses. It's expected. But when it comes to abnormal losses, we are not considering, or we are not putting that cost of the abnormal loss into the t-shirt cost. If we do so, that would be very unfair because it is company's fault. Maybe companies' negligence, companies' machine breakdowns, company employees' training issues. So it's not good to include that cost as part of the good output. That's why we take it as a separate expense. So those are the things we discussed. So normal loss and abnormal loss, it's there. I gave you the examples as well. And with that, we discussed how to do our first process account, process costing, activity 5.1. So if I just show you the answer we developed like this, I told you when it comes to a process account, it's a unique structure. We have to have three columns like this. We always mention them as quantity, unit price, value. Quantity, unit price, and value. And we always debit the inputs of the process, raw materials, conversion cost. I told you conversion cost is the total of direct labor cost plus manufacturing overheads, right? So that is how conversion cost. And then I told you output and the losses are credited to the process account. So output is mainly there, and then normal loss and abnormal losses if we have the losses. And another important thing I mentioned you, always, usually, there's no value for normal loss. We don't put a value for normal loss. Usually, remember, there is one instance where we put a value for normal losses, but usually we don't put a value. We don't record a value for normal losses. Why? Because we are not considering the value of normal losses, the cost of normal losses as separate expense. I told you always normal loss value, this value, whatever the amount that should have been recorded here, we record this value as part of the good output. So if we write the value here, we can't write it again as part of the good output. That is why without writing here, without writing a value in the normal loss cell, we are writing it including in the cost of the output, good output. So that is the basis of not putting a value for normal losses. But there are some instances where we do so. I will explain them. And then I told you there are some steps when it comes to completing a process account. First of all, after drawing the structure, first step is write the information given in the question, right? First of all, you record the information, all this information given in the question. So, as you can see in the question, input how many kilograms, and then what is the cost per kilogram, what is the total value of conversion cost, what is the normal loss percentage, the output, all these things are there. So what you do is you write the raw materials, conversion cost, quantities, unit prices, and then you write the values, and then you write the output of process as well, output of the process one, and then normal loss. So normal loss, it says 10% of the input. That means 2000 kilograms are there as the input. 10% of 2000 would be 200. And then after writing, so we wrote everything given in the question. Second step is tally the quantity columns, not the value columns, quantity columns. So we double line quantity and value columns, but we tally quantity columns first. So you tally the quantity columns, and then if you can remember, 80 units are less here. This is 2000, this is 1920. And then you can see 80 is missing. And that one I told you, how do I understand this? Having a small working like this, when you do this, when you practice this, directly you can identify whether this is an abnormal loss or what. But here, input is 2000, normal loss we calculated as 200. And then if we deduct this 200, which is our expected loss, then what is our expected output? 1800. We are expecting 1800 kilograms to be our output. And then we take the actual output. Now we expected 1800, but what is our actual output? It's 1720. Then what has happened? Our expectation is higher than the actual. That means something has happened. Something has gone wrong. That is our abnormal loss, 80 units. So that is how we interpret this 80. And then like that, we tally the quantity columns. When you are tallying the quantity columns only, you understand what is abnormal loss or what. And then third one, calculate the unit cost. That is the third step. I told you to calculate the unit cost. Always you need to write this formula, process cost minus value of the normal loss divided by input quantity minus normal loss quantity. So process cost you can calculate by adding raw materials, conversion cost together. That is 180,000. And then do we have a value for normal losses? No. Usually we don't put a value for normal losses. In that case, value of the normal loss would be 0. So value of the normal loss is 0 here. And then input quantity, how many kilograms we have put as the input? 2000. So I take 2000, and then the normal loss quantity is 200, right? So I have written like this. And then I have calculated the unit cost as 100. So using this 100, now I'm taking the values for 100 like this. So I can multiply these 80 multiplied by 100. 8000 is the value of abnormal loss. 1720 multiplied by 100. 172,000 is the value of output. Likewise, I calculate the values. So that's how usually we do a process account. So if you take the values, total values, value columns are tallying. So when you have your value columns tallying, it's a sign that you have done your process costing correctly. Right. So that is the process we actually followed when it comes to the process account activity 5.1. Right. Let's continue from there. Activity 5.2. With reference to activity 5.1, that means it's a continuation. Assume that a loss unit can be sold at 9 rupees. That's something new you learned today. Now, previously, we didn't sell our losses. We had normal losses, we had abnormal losses, that's okay. Altogether, how many kilograms we had as losses? 280 kilograms. But now it says we are going to sell our loss units. Remember, when it comes to most of the organizations, when we have the losses, there's a possibility, there's a chance of selling these loss units. If we take a garment manufacturing company, let's say t-shirt manufacturing, when you have the fabric cuts, that means whatever the parts you have removed as fabric cuts, podi podi redi kali, garment companies, garment manufacturing companies, they tend to sell these fabric cuts to different external third parties. Sometimes when it comes to cloth rugs, පාපිසි ගත්තොත් එහෙම. So those are made of those fabric cuts. They don't use the original fabrics. They take just the fabric cuts coming from another manufacturing process. So the garment companies can sell these fabric cuts to third parties at a lower price, maybe. So that means your loss can be sold. Sometimes these fabric cuts, when you have bulks, actually not 1 or 2 kilograms, when you have a lot of kilograms, a ton or ton in tons or whatever, you can sell these fabric cuts to different companies like INSEE, maybe for cement manufacturing. Not that cement is made of fabric, but to get the heat, they might use different fabrics. So likewise, they can sell their loss units to different parties. So you can say, assume that a loss unit can be sold at 9 rupees. That means the term we use for these sales, the amount we are going to generate by selling the loss units, we call it scrap sales. We call it scrap sales. Scrap sales means if you can sell your loss units to a third party, if you can earn something by selling those loss units, you call it scrap sales. So here, what is your scrap sale value? 9 rupees per loss unit. So for 1 kilogram, you are going to lose. That means you can sell those loss units at a price of 9 rupees per kilogram. Now the question is, if so, if we have a scrap sales value like this, prepare the process account, and then a new account is coming, scrap sales account, and then the abnormal loss account. Right, now we will prepare these accounts. So this is activity 5.1. For my reference, I will take activity 5.2 because it's the same. I will take it like this. Remember, when you are writing, you can mention these things with scrap sales, right? So to show you, I will write these amounts again. Right. All right. So with scrap sales, that is the novelty here. Okay, now we'll write the values. Input of raw materials, the same activity, you know, raw materials 2000 kilograms. And then cost of 1 kilogram of raw material is 50. Unit price is 50. So I can calculate the value. This multiplied by this 100,000. Conversion cost is 80,000 rupees. That would be the same. And then the normal loss is 10% of the input. So I write normal loss 10% of the input. Same amount as previous, 200 kilograms. And then output of the process. Output of process 1, 1720. So likewise, I have entered all the details, right? And then I'm going to tally the quantity columns. It's 2000 here. When you take the total, it's 1920. Now you understand, no need to do a separate working. Now you understand what has happened. That is the abnormal loss. Abnormal loss. Something has happened. Abnormal loss. It should be 80. Yeah. Quantity columns are tallying now. Right. So we have done the first step, second step, third step is calculating the unit cost. Now, very important. Remember, I told you, usually when it comes to normal process costing accounts, I told you that we are not recording a value for normal losses. Usually no amount is recorded for normal losses. But remember, I told you there are few instances. That instance is if you can sell your loss units, that means if you have scrap sales, then you can have a value for normal losses. Remember, this is the only instance where you can have a value for normal loss. That means even though you have a normal loss, previously you didn't record it because you wanted to get this value into the output of the process, this value as part of the good output. But now it's a different case because you can sell your loss units. That means you need to record that value in the process account because you are going to earn something by selling the normal loss. Now, in that case, how much is the 1 kilogram price of scrap sales? 9 rupees. See? 9 rupees. So I'm writing 9 here. So when you are doing your working, it's very important. Make a note. 9. And then obviously you can calculate the value. 1800, right? So that is the new thing coming here, actually 1800. Right, now done. We have calculated the normal loss value with the scrap sales amount. That is done. And then we are not putting any value for abnormal losses because we have to calculate that value separately. Only for the normal loss, we are recording this value. Right. Now the third step, calculating the unit cost. So you can use the same formula. How much is the process cost? It's 180,000, right? 180,000 minus value of the normal loss. Now here in this activity, we have a value for normal loss. Previously, we didn't have. Value of the normal loss is 1800. And then input quantity, how many kilograms? 2000. Do we have normal loss quantity? Yes, of course. 200 kilograms. Right. Shall we get the values? 180,000 minus 1,800 divided by 2,000 minus 200, 99, exactly 99 rupees. So with that, you can calculate the value of abnormal loss and the output of process 1. I'm getting the value 99 here and then 99 here and get the values 80 multiplied by 99, 1,720 multiplied by 99. We'll check whether the amounts are tallying or not. Yes, it's tallying. Simple as that. So the only difference is when you have scrap sales, remember you need to write the value for normal losses and you need to adjust that in output unit cost calculation as well. Right. So I'm not explaining again and again because since this is a recording, you can uh, re-listen to the same recording. So that is how you take that. Right. With that, moving on to another concept in process costing. Right. So we discussed normal losses, we discussed abnormal losses, and another concept is abnormal gain. When you hear the word gain, you can understand that it's kind of a saving. It's like this. When you have, I will take one example. When you have input of 2000 units, let's say your normal loss is 10%. Normal loss is 10%. That means how many units? 2000 multiplied by 10% is 200 units. Then what is your expected output? What is your expected output? After removing your expected normal loss, then you can expect only 2000 minus 200, 1800. So you are fairly expecting that you will, at the end of the process, you will have 1800 units. But when you take your actual output, imagine you get 1850 units. So unexpectedly, your actual output is higher than your expectation. What has happened? This is a saving. This is a saving. So this saving is 50 units, isn't it? The difference between 1850 and 1850. This is abnormal, obviously. This is unexpected. We are not expecting this. It's a gain. This is simple definition I can give you for abnormal gain. I hope that's clear. When always your actual output is greater than your expected output, that saving is the abnormal gain. Right. So this is it. When the actual loss of a process is less than the normal loss, see, what is your actual loss here? Just calculate. You expected your loss as 200 units. You expected your loss as 200 units. But what is your actual loss? You have put 2000 and you have taken an actual output of 1850. So your actual loss is only 150 units. What is your expected loss? That means your normal loss, 200. See, actual loss is lower than your expectation. That is the abnormal gain. So it's kind of a negative cost. It's a saving. That's why we call it negative cost, because it is a gain. It is a saving. Right? So that is how abnormal gains can be there. Remember, in one process, there can't be abnormal losses and abnormal gains at the same time. It can be normal losses. There can be normal losses. That is what we calculate based on industry numbers. Normally, what is our expectation? But in addition to that, you can have abnormal losses or abnormal gains. That means you can't have both abnormal losses and abnormal gains together. That's understood, right? Okay. Activity 5.3. We are moving to activity 5.3. With reference to activity 5.1, that means the same activity we are going to continue. Assume that the output of the process is a small difference, 1830 units. And each loss unit can be sold at 9 rupees. Right. We'll do that. So again, I'm using the same example. Let me copy. I didn't want to get the structure very clearly, because then you would be confused. That's why I'm doing it in the with you actually. Then you can follow me. Right. Activity 5.3. Now you understand, right? Abnormal. We'll see. There are some differences in the question. Activity 5.1, the same activity, but output of the process is different now. 1830. Right. Shall we record them out? The first step. Record the information given in the question. Now I can remember raw materials, 2000 kilograms. That's correct. And then cost of 1 kilogram of raw material is 50. And then in that case, 2000 multiplied by 50, 100,000. And then conversion cost. Conversion cost is 80,000 rupees. Right. And then you have normal loss, 10% of the input. It's normal. Anyway, we have to write it. Normal loss 10% means 2000 multiplied by 0.101, 200 units. And then output of the process, remember it's different. Output of process 1, it's even though it's 1720 here in our activity, it's 1830. Right. So I'm writing the updated amount, 1830. Okay, so those are the things we need to write given in the question. Done. And then we are moving to the second step. What is our second step? Tally the quantity columns. Okay. Now see, the debit side quantity column total is 2000. Credit side quantity column quantity column total is 2030. Now what has happened when you are telling? This side is higher than the debit side. So I move to debit side and I write the balance. What is that? How many units? How many kilograms? 30 kilograms. That is the difference. What is this? See, what is your, just to do a small working, what is your expected loss? What is your expected loss? Expected loss means the normal loss. 200 kilograms you expected to be the loss. What is your actual loss? How can you calculate the actual loss? That means you were putting 2000 kilograms, but at the end of the day, you received 1830 kilograms. That means you have lost only 170 kilograms, where you expected a loss of 200 kilograms. What is your abnormal gain? Saving 30 units. Difference between 200 and 170, 30 units. That is what this 30 is here. 30. So what is this 30? Abnormal gain. Now you need to remember something. Abnormal losses always come in the credit side. Abnormal gain comes in the debit side. So that is how you can memorize these numbers. So even if you don't memorize what is coming to which side, when you do this small working, you can understand, right? Abnormal gains, debit side, abnormal losses, credit side. Normal loss anyway, credit side. Right, so we have tallied the quantity columns as well. Now, special thing, here we have what? Scrap sales, same price, 9 rupees. Okay, since we have scrap sales, we can't keep the normal loss value 0. We need to put the value 9 rupees. And then I'm going to calculate the value of the normal loss, 1800. That is also there. Special points. Okay, now we have recorded the normal loss value as well. Now you can calculate the third step, unit cost. Then we will calculate the process cost first. How much is the process cost? Total of these 180,000, that doesn't change. Minus value of the normal loss, 1800. We know how to write it now. Input quantity, how many kilograms you have put? Input, 2000. Normal loss quantity, how many kilograms? 200. All right. Now what? Sorry. 2000 minus 200. Right. It's 99 rupees. Okay. 99 rupees. We'll take 99 here. And we'll take 99 here. We'll see whether the values are tallying. When you are multiplying, values are tallying. 1800, 1800, 182,970, 182,970, right? That's how we tally the value columns as well. This is how you usually deal with abnormal gain. And especially when you have scrap sales, you have the scrap sales and also you have the abnormal gains. Right. So this is how you do it. Simply the process account. Now moving on to another activity, activity 5.4. We'll do this quickly. Deshita PLC is a manufacturing company that produces the product Alpha. This product passes through two processes, process A and process B. A loss of 5% is allowed in process A and 2% in process B. Remember, there are two normal loss percentages, with nothing being realized by the disposal of wastage. During December 2025, 10,000 units of material costing 6 rupees per unit were introduced into process A. The other costs are process A and process B. Now, you were having only one process in the previous three activities, but now you have two processes here, process A and process B. Are you going to put additional materials in process A? No. But in process B, yes, you're going to put additional materials. The value is there. And then the labor cost, overhead cost separately given for process A and process B. Output was 9,300 units from process A and 9,200 units were produced by process B, which was transferred to the warehouse. Okay, now do we have any indication for scrap sales? What do you think? Just think. Do we have any indication of scrap sales? No, right? Okay, so we'll draw process A and process B. I will take the same account. This is activity 5.4. The specialty of 5.4 is two processes. You have two processes. You need to know how to deal with two processes, right? This is process account A, and then I will copy paste the same account, process account B. Okay. Right. We'll fill process A first. It says loss is there. That is okay. During December, 10,000 units of material costing 6 rupees per units were introduced into process A. So we are starting with process A. First of all, materials. I would say like materials because we have overhead separately. How many units? 10,000 units. What is the unit price? 6 rupees per unit. So I write it here and then I get the value 10,000 multiplied by 6, 60,000. And then that is about the materials. And when you see the details coming under process A, labor cost is there 10,000. And then you have overhead 6,000. And you have a normal loss is there. A loss of 5% is allowed in process A. So you write normal loss 5%. 5% means 10,000 multiplied by 0.05, 500 units, you have a normal loss. Do we have any indication of scrap sales in this question? We don't have. So that means, do we put a value here? No, we are not putting value. Usually we are not putting a value for normal losses. Right. And then you have to write the output, right? We have written everything, but output is not here. So output of process A. How many units? Output was 9,300 units from process A. So I'm writing 9,300 here. Okay. Right. So I have entered all the details given in the question. Step 1 done. What is step 2? Tally the quantity columns. So I'm trying to tally the quantity columns. Here 10,000. Here only 9,800. 200 units are missing here. That comes under credit column. If the missing figure is coming from the credit side, that means abnormal loss or abnormal gain. Abnormal loss. I don't do the workings now because I did the working once. Now you need to understand. Okay, the loss units, abnormal loss, 200, and the quantity columns are now tallying. Third step, calculate the unit cost with the figures you have. So how much is the process cost? Total of these items, 76,000 minus. Do we have a value for normal loss? No, you don't have because there's no scrap sales. How many units has the input quantity? 10,000. Do you have a normal loss? Yes, 500 units, like this. That means 76,000 divided by 10,000 minus 500. It's perfectly 8 rupees. 8 rupees per unit. So I take that 8 here to calculate the abnormal loss value, here to calculate the output value, and then I multiply and see like this. Shall we take the total values and see? 76,000 in the debit side, 76,000 in the credit side. So this is how you complete process A. I hope that's clear. I'm not going to explain again because as I mentioned earlier, you can watch the video again, right? Not explaining again. And then moving to the process B. Remember, one after the other one. You can't actually complete the two processes simultaneously. Definitely one after the other you need to complete the process account. So I'm done with process A. Now I'm moving to process B. Right. Now when it comes to process B, you can see some numbers are there. Additional materials, labor, overheads, everything is there. But again, very important point, when you have process A first, I told you always output of the first process becomes this one. This becomes what? The input of the second process. So that means this value should be recorded in process 2 account first. This value should be recorded in as an input in the process here process B account first, remember. So I'm writing, what is that? Output of process A becomes the input of the next process, no? I'm writing what? A special term is previous process cost. Remember, the special term you are using is previous process cost. What is the value? What is the cost of the previous process? How many units are there as the previous process transferred value? Units, quantity, 9,300. I'm taking the value from here, 9,300. What is the value? 74,400. So all these are very important. When you have a previous process, you take that amount first. That is your first step. Then only you are continuing with the additional details. So what are the additional details we have been given? Okay, process B, you are putting more materials, I guess. Yes, of course, in the second process, you might have to add more materials. So I'm writing additional materials. 6,140. And then you have labor, 6,000. And then you have overheads, 4,600. Right. And then what? Do you have normal losses? Of course. A loss of, remember, 2% in process B. So I'm writing normal losses. Input is 9,300. This is what you have started processing. From that, 2%. 186. Do you have decimals there? No, you don't have. 186. Do you have any indication of scrap sales? No. In that case, you can easily write the value as 0. No value. And then what about the output? Output of process B is 9,200. So I'm writing output of process B, 9,200. Right. So I have recorded all the details given in the question. What is the next step? Tally the quantity columns. 9,300 total in debit side, quantity column. Here, 9,386 in the credit side. That means credit side value is higher than the debit side total. That means the difference comes in the debit side. What is the difference between 9,300 and 9,386? 86 units. Okay, it's telling if the difference comes in the debit side, abnormal loss or abnormal gain? Abnormal gain. Right. Then quantity columns are telling. Now what? We can calculate the unit cost. All right. How much is the process cost? You can take the process cost here. It's like 91,140, right? We'll take the value and see. Yes, 91,140 minus value of the normal loss. No, you don't have a value because you don't have scrap sales. Input quantity 9,300. That is what you have input. And then normal loss quantity 186. Okay, just calculate and see. It's exactly 10 rupees. Shall we take the values and see? So to value here, output, I take 10. And then abnormal gain, it's 10. Right, we'll multiply and see. 86 multiplied by 10. And then here, 9,200 multiplied by 10. The value of the credit side value, 92,000. 92,000. Perfectly tallying. So this is how you do a process account with two processors. So one after the other one, right? One after the other one. Okay, this is how you do it. So this is also done. And the answer is also there. Okay. Now I'm moving to now actually with those activities I have completed, how we deal with process accounts when all the units are fully completed. Now, if you just look at the activities we have completed so far, did we have incompleted units? Did we have work in progresses? No, we didn't. All the units were completed, right? All the units were completed. There were no incompleted units. But now we are slowly moving to the scenario 2, having process costing when work in progresses exists. We have incompleted units. So I told you there are two types of incompleted units actually. Opening WIP and closing WIP. Opening work in progress, closing work in progress. Look at 2.1. Process costing when closing work in progress exists, but no opening work in progress. First, we deal with how to do process costing when we have closing WIP. Second scenario is the hardest part, I would say, process costing when both opening and closing work in progress exist. How to do that? Okay, when we have both. That is the most complex situation. Right. So before that, you need to understand what is work in progress, that is WIP, incompleted units. So possible to have those incompleted or you say partly completed products both at the beginning of the period and also end of the period. That means when you start your production in the 1st January 2026, when you go to the production floor on the table, let's say this is the table. On the table, you have some, let's say we were manufacturing t-shirts. Last day, 31st December, we were manufacturing some t-shirts. And then when you go on January 1st, on the table, you can see there are 50 t-shirts, but incompleted. You haven't completed fully, incompleted. That means maybe you have stitched the both sides, but collars are not done, hands are not done, the all these borders are not done, right? Incompleted. That is what? Opening or closing WIP. Opening WIP. Opening work in progress. And then at the end of the day, this is morning. This is morning. And then at the end of the day, at 5 p.m., evening, day end. After completing everything, you were trying to complete these 50 t-shirts, and then you may have started new t-shirts, whatever the thing. At the end of the day, you have 20 t-shirts. Again, what? Incompleted. You couldn't complete this. What are those? Opening or closing WIP? Closing WIP. So those are the opening and closing WIP. So I hope you have an understanding about the WIPs now. Now the most important thing, equivalent units. Now that is again a very important concept you need to understand when you are doing these process costs, especially when you have opening and closing WIP. Listen carefully. Now, when you have these incompleted units in your production flow, that means when you have incompleted or WIP units in the process accounts, you need to know a concept called equivalent units. You need to know a concept called equivalent units. This is like that. Equivalent units is a mathematical computation, hypothetical computation, imaginary computation, not in real terms, not physically available, but mathematically we just calculate equivalent units. It's something like this. Now, I will show you the diagram first. You have two 1/2 completed products. See, don't read the other stuff. Just look at the cups. You have one cup, you have another cup. Altogether, you have two cups. You can see first cup is half filled. That means 50% filled. Second cup is also 50% filled. This can be water. Now, just imagine, actually, physically, there are two cups, half 50% completed, 50% filled, actually. But just imagine if you add these amount of water together into one cup, how many fully filled cups we can have? How many fully filled cups we can have? අපි මේ වතුර කෝප දෙකටම දාලා තියෙනවා මේ දෙක එකතු කරොත් එක කෝප් එකට දැම්මොත් සම්පූර්ණයෙන්ම පිරිච්ච කෝප්ප කීයක් අපිට පුරව ගන්න පුළුවන්ද? How many fully filled cups we can have? Actually, one cup, right? One fully filled cups. So physically, there are two cups with half filled water. But hypothetically, mathematically, how many cups we can fully fill? We can fill one full cup. That is what equivalent unit means. That means 50% completed, two cups are there. When you add them together, what is the equivalent units? How many equivalent units are there? One. Equivalent units are one. That's the example I can give you. So equivalent units means mathematical, it's not physically. Physically, we don't have one filled cup, we have two half filled cup. So mathematically, we can take equivalent units as one. Remember, why are we talking about these equivalent units? When you have incompleted WIPs in the process costing questions, we can't do the calculation with these incompleted units. These half filled or like work in progresses cannot be used, uh, cannot be used in process costing calculations. Because of that reason, what do? Whenever we have WIPs, we get the equivalent units of those WIPs. Whenever we have incompleted units, we calculate, okay, it says 50% completed this many units. We don't consider them. We just take, okay, how many fully completed units can be there? It's not actually there, but we just calculate the numerical number, mathematical number, just to get the process costing question done, just to get the process costing calculation done. So remember, when you have WIPs, that means you need to calculate the equivalent units. That is one way. Now, again, we can do something like this as well. There are 1,000 units. All these units are 20% completed. This is one easy method of calculating the equivalent units. So there are 10,000 units. Physical or what? Yes, of course. Physically, you can see 1,000 units are there. What is the completion rate? The completion rate is only 20%. All 1,000 units are 20% completed. Then how do you easily calculate the equivalent units? You take 1,000, whatever physically available, multiply this by the completion rate 20%. That means 0.2. So how many equivalent units are there? Mathematically, how many units you can fully complete? You could have fully completed 200 units by taking all these materials, labor, overhead you have used to complete 20% for 1,000 units. මේ 1000 complete කරන්න පාවිච්චි කරපු resources ටික තියෙනවනේ. මේ ඔක්කොම ටික එකතු කරලා ඔයාලට 200ක් items fully හදාගන්න තිබ්බා. You could have completed 200 units by using the resources you have used to manufacture 20% of 1,000 units. So that is the meaning of equivalent units. So that is how you easily calculate 1,000 multiplied by 20%. So how many equivalent units are there? No need to think much. 200. So what is the value you take for process costing questions? 1,000 or 200? 200. Always you rely on 200. You don't take the physical quantity, physical incompleted quantities. You take the equivalent units. What is that? 200 units. Right. So that is about equivalent units. I have a small activity, activity 5.5. We'll do that. Dawan PSC produces product X, which passes through two production processes. At the end of December 2025, the first process produced 8,000 fully completed units. I'm just writing the details. 8,000 fully completed, right? And along with 2,000 partially completed, only 50%. Okay, 2,000 partially completed. What is that partially completion rate? 50%. These completed units were units will be transferred to the second process. Total cost of the first process for the month of December 2025 is 180,000. Okay, cost of the process 180,000. Okay, calculate what is required. The first one, calculate total equivalent production units. All right. Now, when you calculate the total equivalent production units, that means, first of all, shall we calculate equivalent units of, this is opening WIP or closing WIP at the end of December means closing WIP. So I'm writing equivalent units of closing WIP. We need to take the equivalent units value of closing WIP. How many closing WIP incompleted units are there physically? 2000. Am I right? 2000 partially completed. This should be multiplied by the overall completion rate. What is that? 50%. Then how can we get the number? 2000 multiplied by 0.5 thousand units, 1000 equivalent units. Then what is the total equivalent units? Total equivalent units means the completed, whatever the fully completed 8000 plus this equivalent units of closing WIP, whatever the amount you have calculated, 1000. Altogether, 8000 and 1000 together, you have 9000 total equivalent units. All right. And then part B asks, calculate the cost per unit and show the cost distribution between fully completed and partly completed units. Okay, so we'll calculate cost per unit. Cost per unit. How can we take it? You can take the process cost first, cost of the process. This divided by what? Total equivalent units. Right. How much is the process cost? 180,000. This divided by total equivalent units. How many equivalent units are there in total? 9,000. Then what is the cost per unit? 108,000 divided by 9,000, 20 rupees. 20 rupees. Then what is the value of fully completed units? And then what is the value of, how much is the value of closing WIP? So how many fully completed units are there? 8,000 fully completed units are there, multiplied by 20. Cost is 160,000. How many closing WIP units are there? Remember, physically you have 2000, that is correct. But are we going to use that 2000 anymore in the process costing calculations? No, we are going to take the equivalent units of closing WIP, 1000. So I'm taking 1000 multiplied by 20. 20,000. Shall we take the total value and see? Yes, it's tallying to 180,000. This is the cost distribution happens. Okay, 180,000 is the total cost of the process, 180,000. So that is how you simply take the value of equivalent units, calculate the cost and all. So I hope equivalent units are clear to you all. Right. Another important thing. Another important thing. Now, that is different degrees of completion. Different degrees of completion. Now it's something like this. When you are talking about closing WIP, I'm taking closing WIP as an example. Let's say there are 1,000 units closing WIP. We are putting different resources to these products now. We are putting maybe direct materials, we are putting labor cost, we are putting overheads. Likewise, we are putting different resources when we are manufacturing these units. Now, sometimes different units, if we take different completion rates, the amounts we put in when it comes to materials, when it comes to labor, overheads can be different. It's something like this. Sometimes, if I quickly draw a timeline like this, and then this is the beginning, this is the end. Beginning means what is the completion? 0%. Here, 100%. Fully completion, right? If you take a timeline like this, sometimes, let's say this is process A. Process A, you put all the materials required for process A at the beginning of the period. Here, you put all the materials required at the beginning of the period. So I'm writing, this is process A, I will take it up. Direct materials, DM means direct materials. Direct materials we are putting at the beginning of the process. And sometimes direct labor and manufacturing overheads, these items, you just put to your process whenever you complete the things. That means if you are 20% completing, if you have completed 20% of your products, you have put 20% of your direct labor cost and the manufacturing overheads. If you have completed 80% of your production, that means you have put 80% of your labor and overhead requirements. But sometimes materials are different. All these required materials are completely 100% put at the beginning of the process. This is beginning situation. Take the same example. Sometimes you put all your materials at the end of the process, maybe at the end of the process, right? Likewise. Okay, now we'll take this scenario first. This is scenario one. This is the example. Right, process A, you put materials at the beginning of the process. Now, let's say you are going to have closing WIP. You also can take these notes when you actually listen to this recording. You have closing WIP. You have at the end of the period, you have some incompleted units, 1,000 units. 1,000 units. And then overall completion rate, you have completed these 1,000 units, let's say 60%. 60% you have completed. That means where are you at? Where are you? What is your completion rate? This is somewhere around 50, right? 60 means it should be more than that. No, somewhere here. I'm just putting it 60%. So I'm writing 60% here. Okay, 60% is here, right? Okay, overall completion rate is 60%. Now you are putting materials where? At the beginning of the process. At the beginning of the process. This is where beginning of the process you put direct materials. What about direct labor and manufacturing overheads? What is the term, common name we can use for direct labor and manufacturing overheads? conversion cost. This is how you usually say it. Conversion cost is added uniformly throughout the process. Conversion cost is added uniformly throughout the process. What do you mean by uniformly throughout the process? සමානව uniformly සමානව process එක පුරාවටම බෙදාගෙන යනවා. 80% completed means 80% conversion cost is also added. 70% completed means you have put 70% conversion cost uniformly throughout the process. Right. Now my point is different resources you are putting in different levels, different degrees. See, materials 100% requirement you put at the very beginning of the process. ඔක්කොම materials ටික මුලදිම දානවා. ආයි පස්සේ මුකුත් දාන්නේ නැහැ. ඔක්කොම ටික මුලදිම දානවා. But think about conversion cost. Not putting everything together at the very beginning. When you go along the process, you slowly, uniformly put those conversion cost to the process. Now, my point is when you have these different degrees of resources, you can't directly say the equivalent units. You can't directly say the equivalent units. Because of that, you need to calculate equivalent units. Now, how many physical quantity, how many physical units are there? 1,000 units. Your closing WIP is 1,000 units. So you have to calculate equivalent units of closing WIP in terms of materials. For materials, you calculate equivalent units separately because it's a different way of putting the materials into the process. And equivalent units of closing WIP in terms of conversion cost, because you are putting these resources in a different way. Right. Shall we take the values? This is how, because you have to have this knowledge actually when you are calculating bigger calculations. So that is why I'm taking different scenarios. Right. Think about materials. Now, where are we at now? What is our completion rate overall? What is our completion rate for these 1,000 units? 60%. We are here. Okay. When are we going to add the materials to the process? When are we going to add the materials into the process? At the very beginning. At the very beginning. Now tell me, if we are putting all the materials into the process at the very beginning, when you reach the 60% completion rate, what is your overall completion rate of 1,000 units in terms of materials? In terms of materials. What is your completion rate in terms of materials? Are you 60% completed or are you 100% completed? I would say you are 100% completed in terms of materials, remember. So in terms of materials, since you have taken all the full material requirement at the very beginning of your process, you don't have any materials left. You have taken all the materials 100% completed. That means 100% multiplied by 1,000 units. 1,000 units are the equivalent units. How did you take it? 100% multiplied by 1,000 units. 1,000 units. How many equivalent units of closing WIP are there in terms of materials? 1,000. Now go back to conversion cost. You have reached 60% of your completion rate. Conversion cost is added uniformly throughout the process. Then what is your completion rate in terms of conversion cost? You have completed, you have reached 60% only. එහෙනම් දැන් වෙනකොට conversion cost එක කොච්චරක් දාලා තියෙනවද? 60%. Uniformly throughout the process means 60%. How do you take it? 60% multiplied by 1000 units. So equivalent units of closing WIP in terms of conversion cost is 600 units, like this. So I hope you are clear. Moving on to the scenario 2. I will take this scenario as scenario 2. Okay. Here I'm doing some changes. Now, let's say we are at 40%. Right. I'm giving the same answer, same details, I would say. Answers can be different. Right. Process A. What is the difference? Closing WIP 1000 units, that doesn't change. Your overall completion rate, now you have completed, let's say 40%. Okay, 40%. Putting materials at, not the beginning, at the end of the process. See, direct materials are put at the end of the process. When the production completion rate reaches 100%, you are putting the materials. Conversion cost doesn't change. Usually that is this is the clause you get in process costing questions. Conversion cost is added uniformly throughout the process. Right. Now my problem. Equivalent units. Calculate equivalent units of this 1000 closing WIP in terms of materials. In terms of materials. Materials pathing hitana. First of all, where are we now? What is our completion rate? We are at 40%. Starting with 0, we have reached 40%. Api inne metana. 40%. Now, what is our completion rate in terms of materials? What is our completion rate in terms of materials? Overall, we have 40% completed. That's a different story. In terms of material, what is our completion rate? Have we received the materials we need at the point of 40%? Have we received the materials? Not yet, because we are going to receive our materials when we reach 100%. So at the 40% point, we don't have materials. So what is the completion rate? 0. Our completion rate is 0% because we haven't received the materials yet. So 0 multiplied by 1000 units, physical 1000 incompleted units, 0 units. Equivalent units of closing WIP in terms of materials at this scenario, 0 units. Kakpat naha equivalent units. What about equivalent units of closing WIP in terms of conversion cost? Conversion cost is added uniformly throughout the process. So you have reached 40%. That means you have put conversion cost up to 40%. Remember, always the same theory. 40% multiplied by how many physical quantity units are there? 1000 units. 400 units, equivalent units in terms of conversion cost. Right? I hope that's clear. Right. Let me do another scenario for you. Process 3. It says closing WIP 1000 units. Overall completion rate is 70%. So we change this. Completion, okay, somewhere here. I will say 70% is somewhere here. 70%. Now we are 70% completed. Materials are put at the end of the process. I will keep that same thing. Conversion cost is added uniformly throughout the process. That also doesn't change. Right. I want you to think. Equivalent units of closing WIP in terms of materials. We are at 70%. We are at 70%. I'm not writing the answer, just think. So have we received all the materials we need? Have we received all the materials we need? We have not. So what is the completion rate? In terms of materials, 0. In that case, how many equivalent units are there? 0 multiplied by 1000, 0. What about conversion cost? In terms of conversion cost, we are 70% completed. That means 70% multiplied by 1700 units. Right. Now my problem. If I change this, putting materials when the production is 80% completed. This is a new thing. This is a new condition. Putting materials when the production is 80% completed. Okay, we are at 70%. We get the materials somewhere here. Let's say this is 80%. This is 80%. Okay. Here we get materials. Now what? We are 70% completed. We will get the materials when we reach 80%. Now, do we have the materials we have? Do we have the materials we need at the 70% completion rate? Still not received. That means what is the completion rate in terms of materials? Still 0, because still we haven't received 0%. How many equivalent units are there? 0% multiplied by 1000 units, 0 units. How many equivalent units are there in terms of conversion cost? We have completed 70%. That means 70% multiplied by 1000 units, 700 units. Okay. I'm quickly taking the last scenario as well. Another scenario. These are not available in your slides. So make sure you write these things. Let's say overall completion rate is not 70%. I'm just changing it to 90%. Let's assume like that. Right. We are putting materials when we reach 80% completion rate. We are now at 90%. We are 90% completed now. How many equivalent units are there in terms of materials? We got our materials when we reached 80%. Now where are we? We are at 90% now. So have we received all the materials we need now? Yes, of course. At the point when we reached 80%, we got the materials. That means what is the completion rate in terms of materials? 100%. We have received 100% materials requirement at the point we completed 80%. See, 1000 units equivalent. This is how your answers are getting changed. What about equivalent units in terms of conversion cost? We are 90% completed. So 90% multiplied by 1000 units, 900 units. So this is how, likewise, you can calculate different degrees. This is coming under different degrees. When you have different degrees of completion, this is how scenario-wise for materials, for conversion cost, you calculate the equivalent units separately. Right? Right. So I'm not going to discuss this activity today. In this recording, I will upload a separate recording for that. So I hope you are clear. We did the 3 activities and then we explained different scenarios as well with different degrees of completion. So you can be thorough with these fundamentals, and then I will upload a separate recording for the rest of the lesson. Okay, so I hope that's clear. If not, you can ask questions. That means you can send me the questions. I will open a forum for that, right? Since this is a recording, you can. Oh yes, now I will share my email address as well. Then it's easy for you to ask questions. natasha@sjp.ac.lk. You can email me whatever the questions you have in terms of process costing, right? You can email me. If it is big question, then I will share my contact numbers as well. Then you can reach me directly. Okay, so just keep this email address for any clarification. Right, with that, I'm ending this recording today, and I will upload another separate recording for the rest of the lesson. Thank you very much.